we go. Okay, so here's BTC. Everybody see my mouse wiggling from side to side?
Yes. Yes.
Great. So I just looked at this, and would that be a what would you call it? A bear pennant? Bear flag? Look at that. If that happens, I think that's why people are getting fairly bearish on BTC. It's threatening to go down to 32,000, 30,000. I know the technical number there is I think about 29,500 before it's officially in a bear market. And then I was looking at where are we now? This here as well, the moving averages, and this is on the weekly. So there's a pretty decent spill there on the weekly, and then this is the 50 MA. So I know some people say that if the weekly finishes below the 50 MA, is a strong possibility that's going into a bear market. So yeah, I really personally don't think we're going into any bear market at all. I just think that we're going into a correction, and the correction is going to push the limits as far as it can before it turns around and goes back up. So yeah, I just think it's an almighty shakeout, and these happen a couple of times a year. So yeah, so you can see it already spiked through the 50. This is the 50 here, the green one. This is the 55 EMA. Here's the Bollinger Band. So it definitely looks like it's going to go down and give it a test again, which would fit in with the double bottom, and a double bottom, and then I think it's going to take off. But let's crack on with setting up the channels chart. So first thing I'm going to do is I'm on the daily, and then let's zoom out and have a look. So now from here is, again, I'm just looking to see the bigger trend lines, and these are super important, yeah. Especially in times like now, because when we're going through the highs and the lows, it's these longer time trend lines that really come into their own, really come into play. So I'm just curious, just looking at this here, then bringing it down here, that would be all the way down at 24,000. And I know a guy that I chat to who's been in the game a long time. He was saying that if the 50 MA on the weekly stays under that, he's saying that potentially it could be going down to somewhere in the early 20s again. So yeah, coming down and hitting this would be a possibility. Is let's have a look at putting the fib on this, just out of curiosity, yeah. So I'm going to put it on this to the bottom, yeah. So from the top here all the way to the bottom, and again, if you take that across and with the golden pocket as being a general target, is yeah, it could come all the way down here, or close to it, or close to it. It could do that, scare the life out of everybody, and then turn around and work its way back up and go into absolute all-time highs. Now, if you think about what's going on here as part of the game, yeah, part of the strategy, this is an absolute shakeout of traders. It clears the space on the way down, and then also clears the space on the way up. So just think about the big money. Is they clear a path all the way down, they start buying in. Is once they buy in, they don't particularly want to wait and hang around for the market to get going again. Is this comes down, it turns around, and again it comes down, it does its thing, turns around, and then look, it shoots back up. So it might come down, might stay for a little while, turn around, and then up it goes. It's not going to come down, stay down. All these guys start buying in with the big money, and then it just stays down here and just dwindles away. It's not the time in the market for that. It's just not it. But it is a definite time in the market for absolute FUD. To scare the life out of people is the perfect time to put out that narrative. Yeah. So I'm just doing some general lines first. There's a basic channel. Again, you can see the upward trend of it. So I'm looking for this upward trend. Is now, and I think that the reason why I put this one in first is because, again, it's going upward. Now I'm going to look for some supports and resistance. And again, this line that I'm going to put in now, this will be very pertinent to any substantial drop, that may be coming in the very near future. Is this line here will be a very solid line of support. So while it may not go all the way to here, if it goes, is it could come to here. Oh, there you go, 29,400. Is that would be inverted commas what people would technically recognize as going into a bear market. And again, that doesn't mean it is. You know, that doesn't mean it is at all. You know. But technically, is there's a boundary there. I think it's 29.5. So let me bring it up a little bit more. Okay, there we go, 29.5. Okay, so then there's that one there. So now you can see the general trend is this has created a support line, a foundation that is building on. There's another one, and maybe I'm going to change the color of this actually. And you can see another support line there. Now, see, I can see it as resistance there, resistance there, resistance there, support there, support there, support there, support here. I think here, if I bring it up, I'll put it there. So I'm putting it in more as a support than a resistance line. Now you can put in both. Because I'm doing an overall, I don't want to be putting in every support and resistance line, or it'll just clog up the page. I want to put the ones in that are most important. I'm choosing the support one because there's one 2, 3, 4, 5, 6, 7, 8, 9 support points there. And there's more support points than if I bring it down to resistance points. So that's a more dominant line there. So I'm gonna keep that there, yeah. So again, is now price action coming down. Look, you can already see, I already got touched off this, got rejected, came back up. Now look, it's slowly working its way down. Slowly working its way down. So all the lower highs here, lower lows here. Okay. So now one of the things I'm looking at here is just the general Elliott wave here, the local one. From here all the way to here. Actually, I should do it the other way. From the top here all the way down to the bottom here. So the bottom here, yeah. So again, you can see that it hit the golden pocket here, and there's 3 steps down. So look, first step, second step, third step. So again, this looks like it's 1, 2, 3. It looks like it's in many ways it's hitting its bottom. Not unless it wants to have a blow off top. Not unless it wants to have, again, that spike down and do a double bottom of sorts before it heads back up, yeah. So from this point of view, it doesn't look so drastic. If you pulled it all the way back to here, is yeah, it could go a lot lower. So it could even go down to a 786. It definitely go down to a 786. 702, yeah, 702. The 41,000 has been talked about a lot. So could do that. Okay, so so now we have an ascending channel, and then we have 2 support lines here, yeah. So now what I'm looking for is, and this is one of the things that I wanted to talk about, is a central line, a central channel that dictates the price, the bottom. So the line that connects the top to the bottom that predicts. So I'm going to show you an example, the Xrp example. So I'm going to pull in an Xrp chart just to show you briefly, yeah. So let me just pull it up. Xrp, here we go. I know you can't see it, but I'm going to pull it over. I'm going to pull the chart over so you can see. Okay, so where's that there? There's BTC, put it in there for now. Okay, so this is an XRP. This is an XRP chart, and I'm going to zoom out. And I'm sure I showed you this already, but I'm going to show you again. Is the dark blue line, the dark blue line here, and I'm going to separate it out now for a moment so you can see it clearly. Okay. So the top always predicts the bottom. That's basically the point I'm making. And that when you find the line from the top that predicts the bottom, it's also the central line. It's the most dominant line in the chart, yeah? Okay. Now this is on this is a wrong XRP chart. I want XRP. There we go. Okay. There we go. So now have a look at this. You see 1 touch point, 2 touch points, 3 touch points, 4 touch points. This is XRP in the daily. So this 4th touch point, the 18th of May, comes down and predicts this drop the 4th of December. So June, July, August, September, October, November, 7 months. 7 months later, to the T, this line predicts that line. So I find that absolutely fascinating. And you'll always find that this line also has points where it's support and then it's resistance, and that it's both at somewhere along its way. It's never just a support or a resistance. It ends up playing both roles. But if you look at this one here, it's resistance here and it's support here. So again, I wouldn't be surprised again to see it drop down and come close to this again. So again, it might be a double bottom where it doesn't break below this, but if I wanted to go, again, this is definitely a target that's down here, which would be 47. Now, if Bitcoin goes and does that 30% plus 34% drop, is XRP could be doing something similar. Just out of curiosity, if it went down, well, that's a 41, 42% drop. Just from where price action is now. Okay, so the center line, this is the most important line in the whole chart. Now you can see it also creates like a butterfly effect on it. I don't want to get too caught up in XRP now. No, I won't. I'll just show you this one. Yeah, this is my charting for XRP here, where you can see the green channel that it's in now. How dominant this is from the top. Here's the blue center line moving through it. These two lines here are from 55, or sorry, excuse me, 16 cent 82. So down here, they touch off here, and it cuts through the body where this wick down, it cuts through where the body is, and this second line goes through the wick here. This green line also goes through the wick, and this blue line also goes through the wick. There's also a descending wedge here, and again, this line goes through this wick. So you can see the divergence point of all those lines. Then to relate that is you have this green line, again, right from the top, coming along here. Look, resistance and support is recently you had the drop out of it, comes back up. It doesn't hit the top, but it touches here, and again this blue line running along here. So I'm going to zoom in. I know I'm doing XRP, but I'm looking to set this up for Bitcoin. So now look, you have this green channel here. Lots of touch points here. It's really solid. Look at the white line here. Remember, all the way back from here, 29th of December 2020. That was when XRP got the news about the SEC case, and again the price just plummeted. So there's a relationship to this touch point at 51.88, and here it is as a support line after a dump. Fascinating. So now, because of that, I've done the same point to the dump wick here, yeah? Because again, I think this, if it's going to be a double bottom, is this line could definitely be where the double bottom gets touched. Excuse me. So now when I zoom in, there is a tendency, remember, the top predicts the bottom. And I already did this on another chart for here. I'm just making this nice and tidy for the relevant, for the present. So is it this one here? Was it this line I did here? I can't remember where it is now. Hang on. One sec. Just having a quick look at one of my other charts. Ah, there it is. Okay. Copy. Okay, so now paste. Now there we go. That was that one. So look, the top, and this is a local top, predicts the bottom. So you can see this channel here is resistance, support, support, and right to a T. So I find when I'm going down in these channels is that anytime I see an opportunity to set a line like this, I set a line like this. They don't all come to fruition, but some do. Some do, and especially when you're expecting the drop. And if you look at where that point is, look at where all these lines meet. Look at where this line meets. So it doesn't take, you don't need to be a scientist to figure that out once you see the common denominators. So again here, just curious about this line here, sideways action here. So one of the things I'm doing is I'm looking to map out just locally what this is doing, yeah, and you can see it's doing a little bit of an ascending. So it's following this white line up. There's this resistance line here that's holding a lot, testing it a lot, holding it a lot at the moment, may break it. If it breaks it, again, maybe it wants to go all the way back up to the green channel here. Also I've noticed here that from the bottom here there's a support and resistance line here, and again there's just one touch here that I've put in, and again I'm watching it float up along this line. So along this line, this yellow line, now it's floating along this resistance line. So we'll see there's a big battle going on at the moment on the hour between the 20 MA and some of the other MAs, and it's trying to get below the 20 MA, and it keeps pushing up. So we'll see what happens. Yeah, I just put this in as a local divergence point. Is this, look at this here, this is a small divergence point within it. So it's after breaking it, but it hasn't started to come down. So maybe this is invalid and it doesn't mean anything, or maybe it's the signal of bearish divergence. And I've already posted that on the hourly there is bearish divergence. It is getting tired. The price action and the RSI are diverging from each other. You can see the RSI is getting, the price action getting tired, where RSI keeps pushing up, and it's called hidden divergence. Yeah. So that's the play of it there. It's quite possible that it'll just get the spill. It's quite possible that there might be more volatility where it might need to push up, bounce off this green line, and then push back down. Either one. It could also be just a complete bear trap and it breaks out and then up it goes. But I really don't think it is. I'm looking at the 4-hour arc, and the 4-hour arc is due a breakdown. So we'll see. we'll see. And then you can see about the drop down here is, look, here would be 58. If we wanted to go lower, we're back down at 50. There's the blue line at 48. And again, down here will be another line at 42, 43. So this would be drastic. This would be drastic. This would be a proper shakeout. So we'll see. Okay, so that's XRP. So now I'm looking for something similar, looking for the same story going on in Bitcoin. So where are we now? Where's the chart? Okay. Okay, so now let's have a look at the peak here. And I'm looking for lines, I'm looking for channels that are going this way. Because we've already done the simple ascending line. You can see that's easy. We've done a couple of support lines. So now can we see something going across this way from top to bottom? From top to bottom. A nice simple thing to do is do one line. Do one line. Okay. Or if we call this a point, because it's happened, yeah, and it's the most recent drop, is take the line here and then just run it to the top. And then look at the connection points, yeah. Then you go to the next one, and you're just looking for touch points, so that by the time you get to this one, is look at this here. So look how solid all those touch points are. Resistance. A little bit of support. Well, it didn't support actually. Resistance, and here is support. So we could put that line there, and we could absolutely say that this line is relevant. I'm going to make that a blue line. Okay. So now I'm going to look and see, are there any more? Because I've just done one. But let's see if we can find any more. And again, same thing. Just looking to see. Again, there's an awful lot of wicks there. But look, here's this one here. This one here, it's on the body a little bit here, it's cutting through a lot here, support. So you can see this one is more of a supporting line, this is more resistance, this seems more of a supporting line. Support. So I would put this line in as well, for the opposite reason to that line, because this was a dominant resistance line, this is a dominant support line. Now because these extend, I'm going to bring these over a little bit more, just so they meet each other. And I do find it interesting that this yellow line, look at this yellow line cutting right through there. 4th of July 2022, 29,000. Okay, so you can see now how this bottom, right down here, when it was 4,000, is that right? 4,275 on the 11th of March, 12th of March 2020. Is that right? Was it that low? Yeah. Wow. Wow, below 5,000. Okay, so here you are having a convergence line between this bottom, the support here, this support here, and then this resistance line, because it's predominantly a resistance line. It may turn out to be, on the other half, to be a support line. Okay, so now it's getting a little bit more interesting. I'm not sure whether we need to do another, but I'm going to have a look anyway. So we're here. We'll run it down. And again, I don't want to put too many in. And you'll notice it starts to look a bit like a butterfly. And if you've been looking at my charts, you'll notice when I put these in, is you'll see that there's this read of it breaks up, moves in, breaks up, moves in. It'll do the same on the opposite side. It'll be support and resistance lines on the way down. Okay, so let's leave both of those there for now. Yeah, I'm gonna make this one blue as well. Okay, so now I am looking for I'm now looking for channels this way. Now, no doubt there's other stuff this way, but I'm trying to keep it fairly tight for now, because when we go in, I'm only on the daily. We're going to be zooming into the 4 hour, and we'll move into closer channels. Yeah. So I'm looking for stuff this way. So from the bottom to the top, you can see that there's one there. Again, you might end up putting that from there like that. Okay. It's a blue line. Okay, again, so you can see, look at the takeoff. This is when it really began to take off. It came down here. Look, it was a resistance line, resistance, a little bit of support, and then support and resistance, and started off with support. So this is one, and I think we can see. Now this is the thing. Here's the question: is these ones have a tendency to be expanding? So they start off thinner at the bottom, and they're expanding out. So you can see now how we have a expanding channel here. I'm wondering, I'm just curious, if we put this here, does that make more sense? Because we're including the higher price action here. Now my test for this would be at the touch points. This one, there's 1, 2, 3. I think this is a nice solid one. Like an example is if you moved it up like this, but then you're leaving a lot out that while it includes this, is you're losing the ability to read these parts clearly, the boundaries. This line as it is isn't supporting those limits. I would be more comfortable and clearer with it being there. So now I'm asking the same thing for here. is, look, there's the same resistance. There's a load of candles there, look. And just because they're small compared to the rest, they are as equally as important as every other candle. So you can't say, oh, that doesn't matter now. It does. Look at that line. Look at what that, if you put a line there and you ran that line all the way up, at one point, you would be looking at this price action on the 1st of September 2020, 15th of September 2020, and the price action is 9, is it? What is it? 11,000. 11,000. 11,000 in September 2020. And you say this line is predicting that on the 9th of November 2021, a year and 2 months down the road, this little line here is predicting that the price is going to be 68,872. So this line here, the bottom, predicts the top. So I think that's the argument done for where we go with this. I think this is the one for us. There it is as resistance, as support, sort of neither there, you know, but here's resistance and here's resistance. And just look at how it meets. Look at how it meets that there. Look at those two there. Absolutely sweet. Okay. So now you have this channel where, look, it breaks this and uses it as support, a springboard up, comes back into it, lands on this as support, runs along, and look here now, this one is a springboard. Look, it bounces back up again. Now this is resistance this time, bounces back down onto this blue line. Gets rejected, it's coming back down heavily coming onto it again. It looks like this blue line is going to be a solid test. Will it hold 45,600 or thereabouts? Because it's held it previously. It held it there. The white line was, but this one was support, a little bit of resistance, support. So again, these are strong support lines. Is this one here resistance? This is like the first time that it's real support. A little bit of support there. So support, and then this one again. This one has been more of a support line. So again, there's a lot of lines here that are blocking BTC from going any lower. So it's not going to be easy to get through all these. But if it does get through all these, it could be coming down to 29,535, which is the technical limit of the bull market, where it switches to a bear market. Okay, and then you have this little lifesaver down here at 23.4, which just sounds outrageous, but it's not because of the impulsive nature of the market. It could come all the way down here, take a little bit of time to sort itself out, and then just take off like a rocket. So wherever it goes to is, and you've got your hodl, don't sell in any way, shape, or form. Do not sell. If you're under pressure time-wise, well, then you're going to have to do what you need to do. But if you're not under pressure time-wise, do not sell. That's the only thing that they want you to do, is sell. Don't do it. Okay, so so you can see the story. The story's getting built up. So let's just do a little recap. Look, we have this one, woohoo, the yellow line, bouncing along here. It's come up and it's been the support, resistance. It hasn't come down and met this yellow line yet. You can be sure somewhere in Bitcoin's history, it's quite possible that it will come down to this yellow line. Maybe a little bit further up, but possibly at some point it will come down and touch it, yeah, is we have these support lines here, these two very strong support lines. Is, look, we have these central lines. These central lines where the top is predicting the bottom. Now we don't know whether this is the bottom, but it's definitely predicting this bottom. And then this also is confirming this. Okay, so these two lines is, if it does decide to come down more, is these two lines will be important, yeah? So now we also have this up channel here. So look, it breaks out of it, comes back into it, touches off it, finds its way to the top, comes back down. And again, here we are at this central theme. Now you would imagine that is, let's say, and this is what I did with XRP. I don't really trade Bitcoin, but on the XRP, I did the same thing. I did the same lines for XRP when I was here. So I could see the top coming, and then I traded all the way down, yeah? It's the same here, is all these lines could have been put in at this point. So this would have been all mapped out. So you can see when it's coming up to here, that the effort is taken, that it's going to hit this a couple of times, is that it is going to have a correction. And then to ask the question, where was it going to go? Well, sure, you'd have all these points locked in. You'd have all these points locked in and go, okay, this looks like the primary target, yeah? So now let's zoom in. Let's zoom in. I'm sure there's more I could put in that, but that's quite neat and tidy. Let's begin to localize a little bit more. And I'm not backdating when I zoom in. I'm not going to start doing channels for here and channels for there, because it's part of the older history. I'll only put it in if it's relevant to today or tomorrow. But if it's relevant about yesterday only, then it's not so important. So here we are on the 4 hour. So we're zooming in. Okay, so now over here, let me have a quick look at XRP. I'm still in my XRP trade, so I'm in my forever XRP trade. Okay, so just about still in the green. Okay, so now at a more local level is what can we see? What can we see? Like there's definitely a channel. There's definitely a channel going down here. I'm going to put it in now, but before I do, I'm just looking to see. If there's anything else. So what I'm going to do, and again, this is one of the things that I'll do, is I'm going to open up another page, just temporarily. Just temporarily. Make sure I'm on the right. Okay. And I'm going to look at the 4 hour, and I'm going to look at the floor of the 4 hour with no lines on it. Because the bigger lines there on the daily is it skews the view a little bit. Just when we're looking at the 4 hour and just something more local is, can we pick something that's a little bit more local just to see if there's relevance that I'm missing. I don't want to miss anything. Now I might be doubling up on I might be doubling up on my lines here, but that's okay. This line I'm pretty sure I've already put in the daily in some form, but that's okay. That's okay. I'm still just sort of in explore mode, so to speak. But I want to get a little tighter. I want to get a little tighter with support and resistance. support and resistance. Now, and this is pretty steep. This is pretty steep here. Again, you can see this supported by this. So you can see you can see the general uptrend, and then the more local downtrend. Okay. And there's a resistance line there. There's a resistance line there. Again, I know I've already put this one in, but I'm just looking at the 4 hour. So again, remember, look, I've done the same thing, but I've just tightened it. There's that ascending. There's the descending. Here's the support and resistance. So now let me go put these in on the daily chart. So now here's this here. And then here. Again, as an example of if this spilled is a target could be down here, you know. 36,000. Okay, so there's that one there. Let's pop this in, see. Okay, so look, there's this line was already in. So now I'll just pull this back to here. And again, often you'll get this as well. So you have the blue line, the expanding channel, you know, and then at the same time you have a tighter channel going up through it as well, yeah. We put that there, and these supports and resistance. I don't think I have this one in. Oh, sorry. Okay. Just put this here. Here like this. There we go. Okay. So there's that one there. So there is the channels chart. If I zoom into the hour, You can see again, look, and it's always interesting. Look at that pink line when we look at it on the daily. It just looks extreme. It looks extreme. When you look at it on the 4 hour, you know, it still looks pretty steep, but not as bad. Not as bad. Doesn't look as extreme. And you put it on the 1 hour, actually looks very reasonable, in the sense of it's not such a steep fall down. It's not such a it's not collapsing as much. So you can see now that is Bitcoin came into this channel, confirmed it over here. Look, touched it again, came down, touched it a few times here, dropped right down to it here, floating over here. Look, touched off it. So you can start to see why this is starting to look more bearish as well, is that it touching off this, and coming down, is if it breaks through all these support lines here, which we know are very strong, but if it breaks through them, is the fear is, oh my God, 36,800, is most likely it's going to come down and do a double bottom. Most likely come down and do a double bottom. Is potentially this white line. 44.7, 44.5. Yeah, it could come down. Let's not pretend. It could come down here. It could come down. So I don't know whether it will though or not. I'm not sure. I'm not sure whether the market wants to go that far. I'm just not sure. Okay, but you can see why it's getting fairly bullish or bearish even. It would need to start to test this a lot more, and to actually start to make inroads into breaking it. If anything, again, look at these lower highs, higher lows.
Can you measure that? Like with that drop that might happen to
the percentage?
Yeah.
Well, let's say from the top here all the way down.
Okay.
23%, 24%.
Well, that doesn't seem to be totally unreasonable.
No, percentage-wise, no. But it's come down a lot already, and I suppose it's the price. You see, 37 it's still well within the technical range of the bull market, so it could do that for sure, and the bull market is still on. Is just people will be in terrible disbelief. You know, that's the problem with the small money, is when the small money, and again, I'm the small money, like I'm not trying to be rude to anybody, but when the small money sees it going up to 68,000 and then seeing it going all the way back down to 36,000, it can be devastating. Where the smart money or the big money this is nothing to them. This is just a walk in the park. They want it to go down here, because that's when the small money can't stay on this ground, that's where they come in and they buy it cheap. So it makes a lot of sense to them. They'll want to drive it down as much as they can to get it as cheap as they can. And it's just a shakeout. It's just a shakeout. And if you took all the conspiracy out of it, oh, it's the whales, it's manipulation. If you took all that out of it, in truth, it would go there anyway. It would go to those prices anyway, simply because.
Okay, you're going to have to explain that a little bit more for some of us, because I guess for me, I've seen how even like stocks have been fluctuated from big institutions, flexing their muscles.
Yeah.
Or bad news coming out, and then we find out behind the scenes they're actually buying up stock, or big corporations will put out bad news and then they'll buy back some of their stock. And so in the crypto world, I almost sometimes think whales coordinate and get together, and if they each sell just a little bit, it drops. And
Yeah.
I understand that it's going to go the way it's going to go, but
Well,
surely.
yeah.
Go ahead.
Let me explain. Is you understand? Well, what I'll explain to you. You understand that the exponential nature of things, not just crypto, the exponential nature of life's ability to move exponentially, is there's patterns to it. They're universal, and one of them is the Fibonacci pattern. And Fibonacci was the guy that recognized it. He didn't invent it. He didn't invent this pattern. He just recognized it, and his name is attached to it. And basically, that he's recognizing part of the exponential pattern. And what he's recognizing is the spiral nature of things. Is that things grow, and part of the structure is a spiral structure, because it's a very strong form of structure that allows for exponential growth. So you'll see, like the snail, the pattern of a snail shell that's the Fibonacci. You know the spirals of the shell?
Yeah, I researched Fibonacci, a good Italian, guy, but you don't think that whales can influence the market?
No, but no, I'm not saying that's. Well, bear with me. No, they can, but bear with me. So you understand that you'll see that structure in animal life. You'll see that structure in plant life. You'll see that structure if you zoomed out and put the universe on the logarithmic scale. You'd see that same structure in the universe. You understand the nature of what I'm saying to you there. That this structure is a universal principle. It permeates everything,
Yes,
and
I agree.
it permeates everything on this planet, and we're all affected by it, and it's all part of our structure. It's in our DNA. It's in us. We are part of that structure. There's not one thing on this planet that isn't affected by that principle. It's a universal principle. So
I'm actually in agreement with all that. I
yes,
am, because I've looked at big things, and I've always said to myself, they seem to emulate small things. So
yes.
there's definitely patterns and definitely systems that just keep on going. I get that. I get.
And human nature and society is also built in those structures. So you'll see in society there are times when there's bursts of growth, and when that happens, it's because of a new network. Humanity has designed a new network, and then it blooms and it grows like a child being born is its most aggressive growth stage is at the start. It bursts up like a plant. It bursts up. So any new network that comes into being has that exponential growth of it, and then it levels out. It's like an S curve. The more it matures, the slower the growth, and then it runs over a longer period of time. No different than our own cells is that we stop growing at a certain point, and then we move into a longer curve pattern, and that's our life cycles. So the smaller cycle, the 7-year cycles in our life. But you can see that in every network that comes into being, is you always get the immediate exponential growth is most aggressive at the start, and that's what's happening in crypto. So that's why the curve and the multiple of x's of a coin is far more aggressive at the beginning, and then slowly matures and develops. But part of that is that exponential growth also has a correction. So you can see it here. This is the Elliott wave. Look at that impulse. This is one of those growth curves. And look at how sharp it is. But then look how sharp the correction is. It's as brutal on the down as it is on the top. But all it does is that's the correction to allow for another burst. So overall, look at the trend is continually moving up. And that's that exponential nature. Bitcoin is coming to a crest, a peak, and it'll come sooner than the others because it was first in the door. So the value of Bitcoin is enormous, but the potential profit in Bitcoin is getting less and less because there's less X's in it. It's not doubling in price as quickly and as often as other coins that are younger. But that's the way of it, and that's what's happening with the older stock market is that it doesn't have the same exponential growth across the board because it's an older network that is running. I'd say it's running out of time because it's a mix of an old world structure with a new digital world structure, and it's becoming obsolete. So this is what crypto and blockchain is bringing in, but it is, again, it's moving in this natural pattern. So if you were to say, what is the true whale? The real whale is the natural exponential growth pattern. The way it works across the board universally, that is the whale. So the smart money, the people who know this, that's the pattern that they follow. So they're not creating that pattern, they are following that pattern. That's why they're called the smart money. They're not reinventing the wheel. They're just going with what they know is the natural growth pattern of any network. So now, can they put their finger on the scales? Yes, they can. This was always going to be a correction. Now, can they go with it or do they go against it? While this is going down, all the dumb money, and again, no offense to anybody, all the dumb money is fighting this. Oh, no. All the smart money is going, yeah, because this is the way it's going to go anyway. So they go with it and they trade it down because it has to. No, very simply, it can only go up. Something that goes up must come down. It's very simple. But there is a mathematical pathway that can be measured out. So the whales are not creating that. They're not making that. They are just following a universal principle, and they're smart enough to go with it than to fight it. And it creates exponential wealth when you go with it. When you swim with the whales, you make the money. When you swim against the whales, it's not the personal whale you're swimming against, it's the universal principle of growth that you're swimming against. You're never ever going to win against that. And if we personalize it and go, oh, somebody's attacking us or somebody's against us, that's just making it personal. Well, it's not personal at all. This just goes like that. Now, can we attach news to that and say, oh, this piece of news is why this price action is dropping? If it wasn't that piece of news, it'd be another piece of news. It's always going to be some piece of news. But the fact is, the correction was coming anyway. No news came out and this went up here. I guarantee you this correction will be happening. With no news, this will still be happening.
I get what you're saying, but sometimes I just think they accelerate it a little bit, whatever direction it is going. And I agree, swimming with them is better than swimming against them.
And I said that. They can put the finger on the scales. As in, once, like look at the seesaw. Do you see the seesaw of this? This line is the seesaw. It's the central line. So when they see it going up, they can pump it. They can pull everybody into the market and pump. So yes, they can pump it up, but they're pumping up a natural pattern. Is now look, they see it's gone up. It's overheating. It's going to dip. Now they see it going down. Yet they can pump it down. They can put their finger on the scales. No different than you and I can leverage this up. We can leverage this up, so we can pump it too. And it's in our interest to leverage it up and to pump it as it's going up and then pump it as it's going down. We're doing exactly as the whales do. But it's just they're bigger, so their weight is felt more. But they are not the ones who are setting the core pattern. But they can manipulate it most. And manipulate it in the sense of they can encourage it more one way or another, but they can't truly block it. And what I mean by that is that if this goes all the way up here, the whales will not be able to stop this coming down. They cannot stop it coming down. It will cost them a fortune to stop this correction coming down because they are now swimming against a natural force. They will lose. And there are whales, when they get it wrong, they get wrecked too. There is big money who lose their shirt because they got it wrong and they went against the natural force and they got hammered.
I get what you're saying. I get it.
Do you know?
Okay.
Do you know what I mean? So it's not to negate any news or to negate people's manipulations, but when you put them all to the one side, you're still going to have this. And attach any news you want to it, this is still going to happen. So when you look at that and with that cleared eye, it takes out a lot of your bias. And that's really why I stay on this, is don't make something else the boogeyman. Because when you make the whales the boogeyman, what you're doing is you're making an enemy of the natural pattern. You're going to fight this. You're going to see it as a them and us, where it's not. Is swim with this pattern, not against it. Don't fight it. So when it's going up, go with it. When it's going down, go with it. You can make money either way, and they're both your friend. None of it's your enemy. So that's really what I'm trying to say, because it sets up your mindset for your whole trading history and how you get on. So I know this is terribly dramatic and stressful if you're buying up the top and it's coming all the way down here. I think everybody is going to have to learn the lesson of buying at one place when it dips and then having to wait until it goes back up. And you learn that lesson once, and then you realize, this is when I sell. I sell here, I buy here. So yeah. But you got to stay long enough in the market. And if you stay long enough in the market, no matter if you bought here, you stay long enough in the market, and that is going to go up X's. It's just you're going to have to wait longer. Excuse me. If you learn to leverage trade, is at one point is you won't need to put your own money into the market anymore. Your leveraging is buying your coin for you. Does that make sense? So your what you've already got in the market is now you can leverage and amplify your amount. So you don't have to take money from your pocket anymore to buy into coins. Now, no doubt when it hits a top, you'll sell. Of course you'll sell. And again, you'll buy back in at the bottom. But it will be on coins that you've already put in and coins that you've leveraged from the market. There's no more taking money out of your pocket and putting it into coin, because you don't need to do it. So that'd be a nice sweet space to get to, so to speak. So any thoughts on that?
Hi, Roy. You were saying about double bottom. Where would the double bottom be?
Yeah. Generally double bottoms. They're generally double bottoms is, if you look at this is one. So it's generally slightly higher than it. And the reason why it would be slightly higher, generally, it doesn't have to be, but generally, is that this here is, from here is an ABC correction. So this is a correction. C is complete. Now you have the next Elliott wave. So this is 0 of the next Elliott wave. This comes 1. When it comes back down, it's 2. But it can only be 2 if it doesn't break below the previous low. So they have a tendency to come all the way to very close, but not breaking it. So then this can be 1, 2, and then you have 3, and then again you're breaking out. And this is why people talk about a double bottom is what breaks the bear, and then the bull comes in. So when we're off on 3, now we have the breakout that's taking us back up. So when you see that breakout of 3, is everybody gets relieved because they go, okay, the bulls are back in charge. Here's this big volume pump. So that's the way that works. And I'm guessing that there's a potential double bottom here. But again, you can hear people getting afraid now, and you can look at price action, and price action is threatening to go a lot lower than a double bottom. And again, this is where, at this point in the market, this is where the fear can take over, and everybody's in disbelief. Now everybody's believing. Now everybody's afraid it'll go even further. And this is part of think about the psychological shakeout. Is the exponential nature of the market is, look at this, Everybody's greed takes over. Everybody's fear takes over. And the discipline is to understand what is really going on. See the truth of what is actually happening. And then don't get caught up in your greed. Don't get caught up in your fear. Is trade both. And then trade them intelligently. And trade them with awareness. Is see what's happening and play your trades. And have a strategy that works for you on the way up. And the same strategy that works for you on the way down. And then is if you play that nice sweet zone, is you're constantly collecting more coins in your sweet zone. Up or down doesn't matter. So again, this is really where I want to get everybody at in their trading, but also in their mindset, that you just settle into it, which means you got to go through the roller coaster. you gotta go through a couple of these, you know, where it's just like, oh my God, I put all my money in this, and it's like, oh God, look at it. So yeah, it's just par for the course of getting used to it. Yeah. So that's the double bottom. That's the double bottom. Are you wanting a specific number off me? Are you asking me for a specific number at the double bottom?
No, not really. I'm trying to visualize the bottom actually, so I couldn't visualize.
Yeah. Well, can you see where the spike down there?
Yeah, I can see that. Yeah.
43.5.
Yeah.
So it now another double bottom that can be lower is of the ABC correction. Maybe this wants to be C. So you could get it hitting these blue lines here, and this is C. You know, or okay. Maybe it's not a double bottom, and it's just coming down here. And again, this is just a wipeout. Think about if it went down here. There are guys and girls who are very, very intelligent traders. And do you see this bottom here? They realized that this is a bottom here, and they are going to milk this. So they would have put a lot of leverage in here. So there's an awful lot of people who've been leveraging this all the way up, and are willing to let it go all the way to the all-time high. So there's a lot of weight of longs in here that have been taking profit from the market all the way up, and intend to take profit from the market all the way out, all the way up. So now look at this. As this comes down, all these people are going, oh, take profit, take profit, take profit. Is they're all clearing out their longs here because they can see their profit dwindling. So, but there will be still people who will sit on this. So now it coming down here is just coming below this is not enough, because their stop losses are going to be lower. So, you know, so a spike down here or a spike down here knocks all these people out. You can imagine if it came all the way down here, all the longs that have been in here for a long time, they all get knocked out too. So now when they all get knocked out, that takes a weight. That clears out the leverage market. So it takes the weight off the market, so that when it bounces, there's a lightness to the market. It can spring up, and there's a lot of fresh growth, so to speak. So this is a very natural process. It's just a natural thing. And for sure, the whales can put their thumb in the scales and force it down. Force it down more than it might want to go. So yeah, so there you go. We'll see what happens, yeah. If you were looking for, go on.
I said thank you.
You're welcome. So let's have a look at when this turns. Let's say it bounces here and turns, yeah. Is a natural point from this line here, support. A natural target would be, it would bounce up to 59.7. Is it might want to go, what's this yellow line? There's a yellow line. So you can see targets as you go up. 59.7, probably do a little bit of a retrace, bounce up, hit off this yellow line. 66.900. Excuse me. Excuse me. Do another resistance, and then bounce up again. And let's have a look. So this will be interesting. So when this does take off again, is possible that it'll come up and hit off this line, 84,676. I'm just pointing out this. that this line could be the new all-time high, and again it gets a rejection. It might even come back down and bounce off this line before it goes up again. So, and again, a lot of people were talking about it getting up to 73, 84, 85, and they would be following this line. So no doubt when it does turn around and go back up, that this line will be part of a resistance it'll hit at some point. Okay, so anybody, any other questions? Hello? Hello, are you still there?
We can't see a screen.
I think it
says the stream has ended.
Yeah, my Discord refreshed. That's why I thought I got knocked out. It's just the screen. Okay.
We're back. Move your mouse. Let me see. Let's see if you move your mouse. We can't.
Can you see it?
No, sir.
Oh, okay. Okay. Let me share it again. Can you see it now?
No. What we may have to do is go back in Discord. Let me see. What happened? Like it froze.
I don't know.
Can you see? There we go.
Okay. So I changed to a different screen. Now I'll change back.
All right, we're good.
There we go. Is that it? Can you see me now?
Yes.
Excellent. Okay. So now is you can see the channels here, but it doesn't tell us is it going up or is it going down. So let's have a look at the moving averages and see what the moving averages can tell us about Bitcoin. I'm just having a quick look at my XRP as well. XRP is having its own battle here on the 4 hour. The 10 on the 4 hour keeps pushing. Okay. I'll leave that alone. Okay, so now let's go to the moving averages on Bitcoin and have a look at them, because this will tell us a lot. So let's just have a quick look at the weekly. The weekly is looking pretty bearish. Like, here's the Bollinger Band down here. So you can see the big spill. It hit it here, came down, touched off it here, came back up and got rejected off the pink line there is the 20 MA. Here's the 5, and this is on the weekly. So you see these on the weekly, these are big movements on the weekly. If this is on an hour, you'd call it a spill, but it's on a weekly. So 5 is cutting through the 10 here. Here's the medial line of the Bollinger Band, so it's all down the bottom part. There's the white and grey are 20 and 21 EMA. This is the 4 EMA here, this purple line. The pink is the 20 MA. The yellow is the VWAP. The green is the 50 MA, and the blue is the 55 EMA. So a big spill there. It's coming down. It is the end of the week. Is the turn of the day is in an hour and a half or so. But for now, this looks like quite a bit of a spill. And it looks like these are going to continue down and push. So possibly Monday is going to have a spill. Unless something turns. Unless something turns. So let's have a look at the 5-day. Oh, sorry. Let me go back to the weekly, because here's the RSI, relative stock index, or strength index, and again is look at that. That's a lot of down. There's a little bit of resistance and then down again, and and it still has space to go before it starts getting into the oversold. Has space to move. So now let's look at the 5-day. Yeah, this is now every 5 days. Again, look at that spill, and since the spill, down, down, down. Look at all these moving down. Is this one, the 20, is going slightly up. So this is pulling up a little bit. Not much, but it's still not going down. The VWAP is cutting through the 50 here, and the 55. That's a bit brutal. That's a strong movement. And on the 5-day, the VWAP cutting down like that, it's indicating that here's the Bollinger Band. It's indicating that it's going to push on the Bollinger Band. So now, if it was going to come down, if it was going to break this local bottom, is the next after that is the 100 MA here at 38,147. Here's the pi cycle chart, the 111 is 35,600. Here's the 200 MA at 23,273. But this will be the next one that will be the support at 38,147. Let me just double check that on the weekly as well. The next one after that, here's the 100 at 29,400. Okay, so now let's go to the daily. And again, is look at the here's the Elliott Wave 3, 4, 5. Okay, and then it starts to it's cresting over, starts to come down. So you can see the 5, the VWAP, and the 10. They turn. They need to break the 20, the pink line on the white one. So again, they break at the 20, and the EMA 20 go with it. And then there's the 50 on the 55 here. Now look, it hits it here. Look at it pushing its way through, breaks through, comes back up. It's now support or resistance. And then it's coming down for the 100, the pi 111. It's testing it, push back down, pushes through. Then you get that nasty spike through. It comes back up. Now it's on this as support. It's on the 200 MA as support. Now let's have a closer look at what's going on here. Is the 200 MA is starting to give. Look, it's getting through. There's a candle that's underneath. Again, testing it as resistance. Is this pushed back up? But again, the body is back down under the 200. This is the 4 EMA, 5 MA, 10 MA, the medial line. Now also look at the Bollinger Bands here. See, the Bollinger Bands are getting tight. So look how wide they are here. When they get tight, it's because look, you can start to see that the MAs are starting to come compact together. This is where it gets tight. It comes in until it creates a volatility. So now here's the 20s and 20 EMAs coming down. Again, that's going to be a challenge. Is that if it comes up and hits this, you can be guaranteed it's going to get a strong reaction down. So it's quite possible. I spoke about this. You might get a pump up to get a push down. So it might snap up to this, might snap up to 50,000. Again, this will happen in a day. Snap up to 50,000 and then snap down. And you can get a snap down to the early 40s. And that would be the double bottom. And then that bounce here would give enough push to break the 20 MAs and break the Bollinger, and then you have the movement up. And again, it would hit off these, probably a little bit of rejection, and then look to push through. So potentially that could be the play of it. The horror story is it breaks the 200, and the snap here is it snaps up or doesn't, it just spills, and then it just spills, and then we have that greater spill that rather than it being a double bottom, it starts heading down for the mid-30s. So, and hitting off the 5-day, 100 on the 5-day at 35 or something like that. So that's the horror story. And then the not so horror story is the double bottom that creates the lift for the breakout. Either one, they'll eventually level out, and then they'll head back up. And I don't think it's going to take that long for it to come back up. I don't know how long, but I don't think it's going to take that long. We're still in the bull market, and there's still a lot of time to go. So now if we look at the 12-hour, is again, look, you can see all these, the Bollinger Bands are already tight. Now this is a 12-hour, so these have been tight for days now. Like 2 of these is a day. So this is where they're getting tight. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days of this. Is you can see that it's not going to go on for much longer. And again, the longer it goes on like this, the more likely it is to go down. That's the general rule. The longer it goes on like this, is after a dump like this, the more likely it is to go down. And again, you could have that snap down, yeah. So, and there's you can see the RSI. RSI at the moment is down. There's still lots of space below there. Let me go and have a quick look at the day. Okay, the day is up at the moment, but again, that day could easily be a down day tomorrow. So now let's go and have a look at the 4-hour. The 4-hour is the RSI is up at the moment. Again, look, you can see that since the drop, you can see that zone that it's been working in. That sideways action, just up and down, up and down, up and down, slowly going down a little bit. Again, now remember the 10 and the 20 on the 12-hour where the resistance, where the 50 and the 55 here are more dominant. Yeah, it definitely looks like it needs to, for it to go up, it needs to go down to get the momentum to go up. And a simple way to describe it is if you ever look at a bird taking flight, is it hunches down, it lifts its wings up, it hunches down, and then it pushes with force down into the earth, and that gives it lift. It's no different here. Is that if there's such a weight, is you got to let the weight take over, let it take you down, and then when you surrender to the weight and you let it go, and again you're clearing out the longs here, is you wipe them out, and that gives you the lift to go up. Is why would it spike? Why would it spike up first? Because it clears out the people in the shorts. Is all the people who are going short on it, putting all their stop losses up here, is a nice quick spike up here, knocks all them out. So it knocks them out, then it comes down here, it spikes down, knocks out all the longs, you know. So now it's cleared the path on both, and now it's free to move back up. So don't be surprised if you get a spike up before it comes down. Yeah, not a big one, but just it can be short and sharp, you know. So now on the hour. On the hour, same story, but look, you can see the higher time frames are now the dominant resistance line here really is the 200 on top here. And if you went into these, you would just see these as a series of Elliott waves, and then corrections. Small Elliott wave, correction, Elliott wave, correction, Elliott wave, maybe an Elliott wave there, correction, a small Elliott wave, bigger correction, Elliott wave here, again 3, 4, 5. Again, just doing this by my eye. This definitely looks like a 3, 4, 5, and again down it goes. Yeah, Bitcoin, I don't know. Jesus, I'd nearly say Bitcoin's going to go tomorrow. You know, looks like it, to be honest.
All right.
Yeah.
I just was doing some channels, preparing for this today, and I was looking at the 1-hour chart.
Okay.
And I'm noticing right now we having a bear flag,
Yeah.
And we just came back to retest it.
Yeah, this one here.
And yes,
Yeah.
in the 1 hour.
Okay, let me go down onto the
If you
1
go
hour.
back,
Yep.
if you zoom into the last Elliott Wave down, like very close to it.
Oh yeah, yeah. Okay.
Or in depth more.
Oh, you know, I'll go in. I'll go to the 15.
Yeah.
The 15, yeah.
Or maybe you can go to the 15.
Okay.
And if you can do a channel for the top and the bottom, you will notice that it's just like coming back right now to retest the bottom channel.
Oh, hang on.
If you go
wait, yeah, where do you want me to do that?
from the lower low, like the last lows that we had.
Here?
Yeah, yeah.
Okay. To here. Like this, is it?
Go up way a little bit more up.
Like this? There?
Yep. That's what I'm noticing.
Okay.
And if I clone this one, it will give me the same one up.
Like this here? Yep.
Yeah.
Okay. Yeah.
Will that be considered correct or?
Oh, absolutely! It's an ascending channel. Yeah, yeah. And the breakout of that will be back to the bottom. So if this breaks out, is ascending channels, they go back to the bottom.
Mm-hmm.
So that would be the generally this will be the target. Yeah. And I think you can do it this way. Maybe this. I think it's something like this. There you go, close to the bottom. So that we Now again, you can see that it's dropped. It's doing a back. You said it there. I think you just said it's doing a back test.
Mm-hmm.
Yeah, for sure. Yeah, it's doing a back test, and yeah, it looks like it's coming down. Also, it looks like a where's the bottom here? Let me just zoom out slightly. There we go. Yeah, that's the arc of it. And again, it'll bring it back down. It'll bring it back down here.
Hey Roy, can you explain why you started the triangle at 2 waves back?
Here?
Yeah.
Yes, because it's a peak. So when
but then the next one could be a peak too if you were because you don't have a finished you don't have a finished bottom and top or
is I'm looking let's say you when your arcs, it's either you're going to have the Elliott wave coming up.
Mm-hmm. So that's why I'm wondering why you didn't start at the bottom on the triangle.
Yeah, absolutely. Is why how yeah? Let me find my words for this. Why didn't I? It was a choice. It was either here or it was either here. And and a lot of
but either one would work, right? I mean, either one would work.
Well, yes and no. Yes and no. Yes and no, because is if I put this, let me do this here. If I put this here like this, here like there you go, here like this, is here's the wave down.
Mm-hmm.
Here's the next wave up. Here it is, and then here you go again. So now
so it wouldn't make sense if we made it. I see what you're
saying. So this is this is the breakout.
This makes better sense.
Yeah. Gotcha. Does that make sense?
Okay.
So there you go. So I can see that as the breakout, which is also so while this is final peak in this arc, it's skyline. It's skyline in this one.
Gotcha. Okay.
So that's.
Thank you.
You're very welcome. You're very welcome. Great question. Because it is this is the challenge. Is you're either going to get it come in from the bottom, and you have like a wave up, down, up, down. You might have a smaller one, but you have that. When it comes from the top, you've got an extra wave down. You got an extra wave down, and then you have the two waves. So when I see this here, it naturally looks like, yeah, this is the entry in, and also I can see this as the breakout of the previous one. So okay, so there you go. So now the person who was talking about the channel, again, look at here's one channel, second channel, third channel, and again fourth channel, and then you have the breakout. So you could also zoom in, and you can see that. And again, I did this on XRP earlier as well. Is here's a 5 minute. So while these are the 15-minute ones, here's the 5 minute playing out. Excuse me. Sorry, I've got a terribly ticklish cough. So yeah, here's this here. So now here's the Elliott Wave up, and then here's the ABC down. The three drops: one, first spike, second spike, third spike down. Then it will come up for mountain peak in the 5 minute. It'll come for mountain peak, which will be final peak on this 15 minute, and then it will come back down again for third drop, and then again is the question is then the breakout. Is it going to go down or is it going to go up? And just from looking at the moving averages, it looks like it's going to go down. Now, can we get confluence? Can we look for confluence on on the arcs? So here's the excuse me. Now I know I have this. I should have updated this. This is the hourly rather than the 15 minute. Let me correct this. This is the hourly at the moment. So now on the hourly, it definitely looks like it's coming to a breakout. Hang on a second. Where was that one there? See this one. I had the same with XRP, and with XRP, because they're very, very similar, is I figured out that this is actually the hourly, not the 15 minutes. So I separated them. So now, if this is the hourly, then the 15 minute would be the one I showed. Okay. So if this is the hourly, move this over here for now. One sec. Where's that one? There we go. Okay. So then this is the this is the 15-minute. Oh, hang on a sec. I'm confusing myself here. Ah, there we go. There we go. Okay. So the red one is the hourly. Is this one here is the 15-minute, and then this is the 5-minute. Okay, so I was correct. I was confusing myself there. So the reason why I'm doing this is that I'm looking for confluence. Is what I'm looking for is something that's going to tell me that this breakout is either going to go up or down. Yeah. Oh, I'm pretty sure that it's going to go down. But now let's do the 4 hourly. Where's the 4 hourly? Now if I go to the 4 hourly, now bear with me. Now this is why I promised I'm going to do a weekly update with Bitcoin and Ethereum, is so that it'll keep me on track with these charts. Okay, so now the 4 hourly. Let's do this here. Okay, so now let's get the color of this right. Okay, so now let me get rid of the 5-minute one, yeah, or this. Okay, so now if this is skyline, okay, again, dead cat bounce is resistance peak, first spike, mid-range high, second spike, third spike. Okay, so on the 4 hourly, again, third spike, is while this is mid-range high, on the 4 hourly. This is skyline. No, this is skyline on the hourly. Skyline on the hourly. This is where we have confluence. Is while this is third spike on the 4 hour, it's also third spike on the 1 hour. So now this here on the 4 hour, this here is double top. As stretched out as it is this here is double top on the 4 hourly. I'll actually put it in the blue so we know, yeah. Okay, so at double top, after double top is we have first drop. So first drop is due. Is these could be it, but they don't look like it. They look short. But but I think first drop on the 4 hourly is due. Yeah. Now let's have a look at the hourly. So here we are, skyline. Confluence here is third spike. It's third spike for both. Is again, without going through them all, resistance peak, mid-range high, dead cat bounce is first drop, second drop, third drop, is double top, first drop, mountain peak. There's mountain peak. And you can see the sideways coming down. So now from here is either second drop or second drop, third drop, possibly this is third drop. Again, this is where the the sideways can throw you off. Sideways can it can be very distorting. And then I question whether this is third drop or not. I don't know. I honestly don't know, because the sideways gets very messy here. So is this, if you get a drop down here and it's a double bottom, I would say you have first drop, and then you also have a third drop. Is third drop, or is you would have a final bounce. Final bounce come down, and it can pull the bottom of the 1 hour down here. You could definitely have that. Or this could be third drop. This is final bounce, final peak, and you have breakout. So if this happens, this is a breakout, and then it's the breakout of the 1 hour. Is the first drop here. Again, first drop is most likely the bottom one. They're equal, this here, and then you have, again, you can have first drop, whatever goes on here is part of, it can come up to final peak, final bounce, and then breakout of the 4 hour. So that for sure can happen. Don't think it is though, but it can happen. But now when you zoom in, oh, sorry. The other option I am thinking about is if it goes lower, if it wants to go lower, again, this could turn into a breakout on the 1 hour. So if this went down to 30 something, then you have the breakout on the 1 hour. You'd have a new arc on the 1 hour, and then the 4 hour is you'd be pulling. And again, it starts to move into more of a descending wedge. Is you could have first drop, you got a first drop down here, and then the 1 hour starting to look like or the 4 hour starting to look more like a descending wedge. You'll see that happening here. It's pulling it down, yeah. So we got to see. So that would facilitate a bigger drop on the 4 hour. It would create a new arc on the 1 hour. Equally, you can have a breakout of both. But now let's have a look. So part of the confluence here is first drop is due on the 4 hour. Is first drop is due. Same on XRP. Is the 4 hour hasn't had a first drop yet, where you get a proper clear drop down. Yeah. When you go into the 15 minute, again, let's get the color right here. When you go into the 15 minute, okay. Again, you have skyline here. Skyline here. Again, rather than being third drop on Skyline here, this would be third spike. Oh. It'll be third spike here. Okay. So this is going to be mountain peak. Mountain peak. Here we go. And again, this see the drop here. That's a nice clear third drop. That's an example of what I'm looking for and expecting on the 4 hour, is that you get a proper third drop. And look at the way it actually it's slightly lower than a third spike. So that's what I'm looking for on the 4 hour. It hasn't happened yet on the 4 hour. Hasn't happened. And then equally on the 1 hour, as much as you're getting drops here, it's all within this tight range. There hasn't been a proper, although you could argue this is a bit of a drop. You could okay, I take it back. You could argue that this is a bit of a drop, but it's very small. It's not a clear, concise drop, and third drop has a tendency to be substantial. Okay, so there's. Oh, I keep doing this. There's a third drop. Okay. Looks like final peak. So we just put in final peak. So final peak again. Here it is coming down, and again you can see that from the MAs, the spill here looks like it looks like there's going to be a breakout of this 15 minute. So a breakout of this 15 minute. I'll give you an example. Just as a simple measure, the breakout of the 15 minute, you take this, you put it there. And that would be the breakout. That would be, well, it's probably put a bit better. That would be the breakout of the 15 minute. And the breakout of the 15 minute here is first drop on the 4 hour. And I would suggest it would probably also be the proper third drop on the 1 hour after all this fecky sideways. So that
looks pretty close to your double bottom too.
It does. Yeah, it does. Yeah, it does indeed. Yeah, yeah, absolutely. So you can see where I'm layering in the confluence. That it makes sense. It makes sense. And again,
It is a little slightly lower though than your double bottom, isn't it?
Well, there it is there. So no, it'd be in and around it. It'd be in and around it. So
okay.
It would definitely, the breakout of this 15 minute fits into this. Is the 4 hour clearly hasn't shown a first drop. It just clearly hasn't shown it. You could argue it for the hour, but not for the 4 hour. It hasn't shown that clear drop. So, and that's what I've been waiting on. And then the sideways action is, again, it's double top, and it's just all dragged out. So I think that the timeline that the sideways action really distorts at this point is the hour. It seems to mess up the hour. It makes the hour the hardest one to read. But now let's just zoom out. Let's zoom out to the day. Let's zoom out to the day. Let me just move these out of the way, and then see what the day is showing us. Okay, just to see what the day is showing us. Okay. Okay, so and I'll probably put down there like that. Yeah. I'm just measuring the 11th of March 2020. Here. There we go. There we go. I remember this now. I remember this. This here is yeah, I remember getting caught on this, because again you got to look at this beautiful, and then just wrecked a lot of people, and then you had this fucking sideways for ages. Oh, in the summer was brutal for sideways action. So here's this one here. Okay, so now the new day is we're here so far. Again, I need to zoom in to get the okay, so now we have on the daily, we have confluence here with Skyline on the 4 hour, and on the daily, they're both on Skyline. Okay, so now is again dead cat bounce, resistance peak is this is mid-range high, and I'd say this is second spike here, mid-range high. So mid-range high could there be a thought to put Skyline here on the hour, and Skyline here on the hour would be mid-range on the 4 hour and mid-range on the daily. Okay, so mid-range. So then confluence would be, this is third spike. This is third spike on. This is third spike. This is third spike. Now I gotta check my XRP for a sec. XRP is going up. Okay, gotta really check my XRP here. Sorry guys. XRP is doing a bit of a pump. Okay. There it is, moving again. Yeah. Do you know, because all the guys that are looking at XRP is it looks like XRP is it's on its Elliott wave. It's done the W. It's doing the scoops, and it's just moving so fucking slow that you know, we talked about doing the W's, and then there's 1, 2, 3 scoops. So it looks like it's on its third scoop. So after this, maybe a little fourth one. There might be another retrace, and then that'll be 3 to 4, and then the blow off top. It really does look like XRP is going to hit at least to 86, maybe 88, before its Elliott wave is complete. I'm just looking at that now. Okay, let's go back to Bitcoin. So now is again, here's confluence on third spike. God, it's getting a little bit hard to read, isn't it? So now let me just I'm going to clear out some of these, so that because they're the parts that are making it difficult to read. Okay, so now Skyline third spike is this looks like on the daily. And again, why is the confluence so strong here with the daily and the rest? Is because if you look at the start point here, is this Elliott wave up, is most of this daily has look at the lift up. is my problem with this all along is that this is not a, this is what I've heard people say about Bitcoin, is this is an Elliott wave, and it is complete, and it's going through a correction. But if you look at this wave, this is not an impulse wave from this one. I know I'm divergent, but I'm not, because it's here's the bottom here. Here's the, oh, let me just pull out the fib. Is if I was going to measure this just very simply and go, here's this this wave. The next impulse after this, generally you'd measure it as the 1618, and because of the parabolic nature of the bull run, it could possibly go to the 2272. So now the 1618 is 102,000 for a Bitcoin. Again, a lot of people are trying out that figure. And then the bigger figure is 142. Again, those figures have been quoted. This is why they're quoting them. So now this hits here, and I know it's doing a correction, is all I can think of is that this is not the full wave. All this is so far in this bull run. And a lot of people are going, because it's the 4-year cycle and we're coming to the end of the bull run, therefore, God, this is the peak, we're going into a bear market. It's not. This bull run is going to be extended. This bull run is going to go probably all the next year, possibly into 2023. So this is 1, 2, whatever this comes down to is 2, then you have 3, 4, 5. This is what's really going on here. And that this arc here, as I measure it now, this is just the Elliott wave up to 1. This is the ABC correction down to 2. And then you're going to have it sideways a little bit, and then it's going to go up, and now then 3 is going to take off. That's what's really happening. And it's going to take till the end of next year or early the year after for this to actually finally complete itself. So the bull run has a long way to go. But you can understand why people are getting confused and getting freaked out, because remember, when 1 happens, when 2 happens, 2 likes to go all the way back as close to 1 as possible. And again, this is why people are thinking, oh, we're going into a bear market. This is it. This is just 2, which is setting us up for 3. And then this is why we have such a confluence between the 1 hour, the 4 hour, and the hour, is because this is only 1 to 2 on the daily. This is not what this arc is going to finish. It's a baby example of the daily by the time it will be done, you know. Okay, so now let's get a little bit more specific about this then, yeah. So third spike. So if this is third spike, well then again, this is part of double top on the daily. And also, it would also explain why is this going on for so long? Sideways action on the hour, it's just dragging out. But when you think about the daily and the double top on the daily, this is perfect timing. This is perfect, because the daily things happen over a much longer period of time. So on the daily, this is nothing. To be honest, this could go on for another month. It's done it before. I don't think it will. But the point is that the last time I did a dump down to 51, it came back up and it arced over, and a month later it came back down and did 51 again, and then it took off. Here. Look, it hit it, came back up, and then a month later hit there, but came back down, and then it took off. That took a month. So now are we going to spend a month in this? I don't think so. I hope not. But you can see now, and again, possibly because we might do a double bottom and off we go, is you could nearly say this is the double bottom. 1, nearly 2 weeks later, slightly more, 2, did another one, and then up it goes. Maybe you could call that a triple bottom. So we are definitely due another drop. Look, just after 2 weeks, drop, lift, and then drop again. So even on the daily, is this double top is telling me that, yeah, there's a drop coming here. So might not be the only one. So does everybody get what I'm saying? So even on the daily is telling me that there's a drop due. That from third spike, you got double top, you got first drop, and first drop can be bigger than third spike. So first drop, we could be going down to somewhere in the mid 30s. We could have that bigger drop, even the early 30s, and that would actually fit in with the daily and where it is with regards to 1 and then the 2. And then remember, 2 likes to come down lower. So the more I think about it, is I don't see, I can see two, if this is just a 2, normally forget about it. I'm talking about Bitcoin now, just any 2. When you get 1, 2 likes to come as close to 1 as possible. So if I look at a support or a resistance line close to 1, but above 1, is, what are we looking at? Something like that there. Something like that there. And again, I'm just throwing this out. I'm just looking at this support and resistance, support and resistance. It's both. So again, 35,000. So yeah, I can see this drop into 35,000. I'm not saying it will, but I can see it. And that would be, again, I think we already measured this, that would be a 25% drop. It would definitely create a new 15-minute. It would create a new hourly. And would we be able to pull the 4-hour and make sense of that? I think we could pull the 4-hour down. Where's the... Oh, there's the 4-hourly. Yes, we could pull the 4-hourly down to that. And it would still hold the form of the 4-hour. It'd be creating more of a wedge shape, and again, you get the bounce. It'll move into this space and then break out. So yeah, you could. It would still be within the 4-hour arc, but it would create a new hour and a new 15-minute, possibly another big 15-minute. Okay, so yeah, I would suggest if you're in Ethereum, XRP, or Bitcoin, or any of the coins, is if you have a look and you measure like anything from a 20 to a 30% drop, check what that is, and then just double check that you've got yourself covered with your leverage, with your dollar costing, with your stop loss or liquidation price on your shorts. So careful with the spike up, and then if you're going to go on a long, is careful not to go in on the long too early. So you're better off going in, pulling it down lower. And I've got 4 longs in now, and I've got on XRP, I've got 2 longs starting at 65, and I've now 2 longs starting at 55. I've pulled two of them down. And what I've done is that I've reduced the price. I've reduced how much I start my longs at, and then every 5 points I have another entry point. And as it goes down, I'm putting in more money. So it's pulling my entry point down, and it's also pulling my liquidation price down as well. So that's me covering myself in case XRP decides to go lower than 65. So has anybody any questions?
Roy, normally what percentage do you start with? Like, let's say you have 4 longs, so the first 2, what is the percentage of your entry point, like out of your XRP, like start with?
You're asking a general question. I'll say it this way: is let's say I wanted to leverage 1,000 XRP at 10x. So now, and let's say I'm going to put in 6 entry points. Are you with me? So
Yeah.
let's
Yeah.
say I put in 1,000 at 65, 1,000 at 60, 1,000 or 2,000 at 55, 2,000 at 50. So that's bringing up to 6,000, 2,000 at 45, and 2,000 at 40. You understand?
Okay. Kind of. Like, so you start with, like, let's say you have $1,000. That's all what you got, and you're planning to get to that long.
Yeah.
So I'll put $100, for example, at 65 with a 10x leverage.
Yes.
And then we'll go another 100 at 60, and then 200 at 55, and carry on with that.
Exactly.
I'm trying to add myself down.
Yeah, exactly. Yes. Yeah, exactly.
But I wouldn't start more than 10%. Is that what your take on that?
Well, the reason why in these circumstances is I can see XRP going down to 60, 65, 60. But now the more I talked through tonight, I already saw the potential of XRP going down to mid-40s. Mid-40s. I even saw how XRP could go down to early 30s. But I really didn't. I really don't think, or didn't think, that it would go that far. But now, the more I look at BTC and the more I see the play of BTC, I see it's more likely for BTC. So if it's more likely for BTC, it's also more likely for XRP. So I pulled, and also Matt, Matt, who was on Xrp Chat today, he convinced me to also be a bit more protective of my leverages. So I changed the amounts that I was putting in, where I put less in at the start and more in closer to the bottom, because it makes my bottom points stronger, my bottom entry points stronger, and then I pulled two of them down where they go in later, and I pulled them down lower. So just as a way of really being able to bring my liquidation price down below 30. That's really my target, is get my liquidation below 30. Excuse me. So
yeah.
So that's what I'm doing there. Now again, listen, I've done this a bunch of times before, so I'm not recommending this to new beginners. I'm not recommending you do this at all. If you want to do it, and you're trying it out, I would suggest that you go lower and you play it safer. So rather than starting at 65 or 55, is start at 50. Start at 50 and really scale down incrementally, so that if it was a inverted comma shit show and they decided really to tear into it, is your entry point is nice and low, and you're scaling down so that you can go well lower than what they can take it, and you'll get into a really sweet spot, and you're really secure in that, and where it may not go down that far, so you may miss out on that opportunity, but you're better off playing a lower game and getting the bottom easier if you're not used to it, than it coming in at 65 or 55, and then you start seeing a plummet to 30. Because when I'm in that, I'm actively trading when that's happening. I'm not sitting back and just letting it happen. I'm reading it. If I need to put money in the margin, I'll put money in the margin. If I need to drop in another entry point to boost my liquidation price, I will, and I'll read it as I go down. So if you're not used to doing that, now is not the time to be learning that in this volatile moment. There are many times when you could try this in much safer times, when you're not going to have such a potentially drastic move. It's not the time to test it. Is when I'll give you an example. Normally, when you see, when it's in not such a volatile moment, when you see that something is coming down for third drop, and it's not so volatile, so you know that it's only going to go so far. It's not going to go tearing down any lower. you can practice your dollar costing in, and you're safe. You know you're safe, that you can play this and test it, you know, and you'll do yourself no harm. So they're the times when you want to practice this. Now is not the time for you to go, I'm going to give this a go, because it could get pretty rocky. So please don't do it if it's your first time, or you're only getting into it.
Or as you say, it could wreck you. We don't want to get wrecked.
I don't want you getting wrecked. No, I don't want you getting wrecked. Don't get wrecked. There's more than enough opportunities for you to figure stuff out here. So this is a risky time in the market. So yeah, unless you have experience and you're confident in this, now is not the time. So get past this bit when it all settles, and we're into a nice steady arc. Then you can start to practice that, knowing that it has a limit, that you know it's not going to go past that. So now you can play with it with fun, make money, enjoy it, and not get wrecked. Okay, guys. Thanks very much. That was a fascinating conversation. I will now bring these BTC charts up to date, and every week we'll do an update. And I'll do exactly the same with Ethereum and XRP. We do updates, and just keep on top of them. Yeah. Okay, guys. Thank you very much.
Roy.
Yep.
Roy, on behalf of the whole class, we really appreciate all the work you're doing. We
you.
know it's a lot between the videos and the charts and everything. It's a lot of work, and on behalf of the whole class, we appreciate you.
Thank you very much. Yeah, I'm thoroughly loving it. But it's staying on top of things is a bit of a challenge. But other than that,
yeah, absolutely, you'll make a big of a difference for each of us, every one of us, I would say.
Yeah, super. Thank you. I really appreciate that.
Thank you very much.
And listen, as I said, the more you get familiar and the more you get engaged, feel free to get engaged in the conversations. Post your stuff. Become part of the conversation. Put it out there. Get a bit of feedback, and then if you can see somebody else who's needs a bit of support, throw in what you know. If you know it, share it. And the more of us doing that, the merrier. Yeah. All right. Thanks, guys.
Yeah. Thank you.
Right. Have a good one. Cheers. Bye-bye. Bye-bye.
Cheers. Bye. Thank you.